Welcome to the Curiosity Crisis. We challenge ourselves to explore the world of business, tech, investing, and science. Get curious and be part of the journey as we discuss, challenge, and learn. Today, we're chatting to Blake Burton. Blake started his professional career with PwC in 2011. He went on to become co-founder of Perth's largest privately owned web hosting company, NetOrigin, in 2014, before he took the company to a successful trade sale to Venture IP in 2019. Since then, Blake has done a lot, and he's only 31. His most active role is as the managing director for Addison, or AI1, an ASX-listed data solutions business. He also holds a directorship with Field, a fast-growing software-as-a-service business in the US. And closer to home, he's invested in Intercast Australia, a Perth-based non-ferrous metals foundry. So, Blake, switching themes a little bit, the other massive thing that I wanted to pick your brain about is your investing journey. So, obviously, you've done a lot with business, you've started business, you understand at the core how they work through your days in auditing as well. But if we go to your sort of personal investing philosophy, right at the start, like initially, what sort of asset classes do you invest in? Very loose splits, just the type of things that you play in, I suppose.
Yeah. From the start, I was always a bit of a fanboy of Warren Buffett. I always used to read his books and stuff. So I really actually took an approach of value investing.
Yep.
So looking at companies with, consistent cash flows that are, growing sustainably, that had a bit of a moat. But that's probably changed a bit over time. And that is for a few reasons. I missed out on a lot of opportunities because being young, I was like, no, it needs to be this. Warren Buffett's made billions, so I have to stick to this.
Yep.
There's a million ways to skin a cat. So I'm kind of a bit more spread now. If I find a company that I love the brand, I hear good things about them in the industry. You hear solid reviews about them in the news. I think brand is very powerful. So I'll not necessarily tech, I'll look at other industries as well, but I'll invest in that way. When I'm going kind of early stage, so like Field, I was like one of the first investors in that.
Yep.
Absolutely loved the field management platform, what the guys were doing at the time and what they're doing now. But that was actually more so about investing in Harry, the founder.
Yep.
So I think when you're looking at like early stage stuff, it's, you could have the best product in the world, but if you have a loose cannon of a founder who's going to run off or just blow all the money, it means nothing. You're actually really, and I flew over to Melbourne to meet Harry. We hung out for the weekend.
Yep.
You're really, really investing in that person and investing in their vision. 9 times out of 10, the company they're talking about then probably isn't necessarily going to be exactly where it ends up. But, they kind of have that rough vision of where they want to go, and they realise they just need the right people around them to support them.
Yep.
I think that's quite important. Now, I still haven't decided whether it's good or bad, but mum's side's Italian, so growing up, it was always property. So like when I was like, no property, all shares.
Yeah.
But I don't know what happened because I do have a few properties now, so I've kind of done a bit on that.
Yeah.
And I'm becoming a bit more open to it.
Yeah.
But yeah, the big thing for me, I think that there's no real hard or fast rule. I think I don't day trade. I don't like doing anything like that.
Yeah.
Some people do well. A lot of it's around sentiment and such. But to me, I just look at things like, what is actually sustainable, and then you kind of look at the risk. Early stage investments are so different to ASX listed investments in terms of risk.
Yep.
But I like to kind of just be able to say, how's this business going to grow in the long term?
Yep.
And that's probably my focus. So yeah, I don't really do as much early stage stuff anymore. It'll be maybe one every year or two. It's like I definitely would say no a lot more than I say yes.
Yeah.
Because there's just so many risks around it. But I think if you do find a few good ones, then and you're kind of patient with your horizon, you don't look to double, triple your money, whatever it is in a year. You look at a bit more of a longer term horizon.
Yeah.
I think that's quite important. Yeah.
So across them, there would be some listed stuff, some early stage. Would you call it venture capital sort of investing, or early stage? What's the term for that?
Yeah, even like angel investing sort of stuff. Yeah.
I might get you in 1 second to give a definition of that, just for our listeners. That like a lot of them would know, sort of. You're listed, buying off a broker sort of thing, and then there's also property. You said so. It's a bit of pretty diversified. How would you, like in a nutshell, define angel investing?
Yeah, so to me, angel, I think there actually are like technical definitions around all that sort of stuff.
Yep.
But to me, angel investing is really early stage investment, like pre-revenue. You've got an idea, you maybe got a beta prototype of what you're kind of offering, but your valuations are more down, kind of like 2 mil, sub 2 mil sort of thing, which is insanely, well not insanely, but it can be really high risk, right? Because it's always one or two key people in that business that are needed for it to kind of grow. So you have to look at how incentivized they are to kind of do that.
Yeah.
But it depends on your risk appetite, because a lot of companies from there can do quite well.
Yeah.
So I'd say, angel investing is, and I might get some critics on this, and I know this is actually the technical definition.
Yeah. That's right. It's just what it is to you.
I look at it more where, you got the listed stage of things. Before listing, you've got your pre-IPO. Before then, you might have, Series A, B, C, D, a bit later kind of stage. Once you're making revenue, once you're a bit more advanced, angel investing is really about that early stage of backing the person, and seeing kind of, what their vision is and what they want to build.
Yeah. Gotcha. Well, straight sort of segue into the next question. Do you think that investing philosophy and how you look at those early stage businesses, was that very much shaped by your early experience with Net Origin and stuff?
Yeah, definitely. It's and I've seen so many businesses as well where it's like, man, this is an awesome product, it's an awesome idea, but you might have a founder who is just, I don't want to say arrogant, because I think arrogance can actually be a good thing, or a bit of arrogance is so good in business, but they won't listen to anyone. It can't be like, you have to kind of have an arrogance of like, no, this is where we're going, this is my vision, we've got to stick to it.
Sort of tunnel vision, but
but you need to be able to go, but I don't get this part. I need to bring this person in to help me. I don't get that part. I've seen a lot of founders where they kind of go, no, we're doing it this way, that way. And you've got some really great people around them saying, that is wrong. Do not go down that path. Yeah. And that's a very hard thing to kind of find in a lot of people. But that's what I kind of find. You need to find someone with that bit of a balance.
Yeah. Well, that's so interesting. Like, I don't have the startup experience, but in terms of bigger business or, large scale, large market cap businesses, I find sometimes in different teams that I've been in, because I've moved around a little bit, sometimes it's very much like a pyramid. Like, there's one holy figure that will be the way it is, and there's not really any shifting that. But then there's some leaders that I've found are really good at just bringing the people in and getting the insights from people that are subject matter experts all around, and then they're pretty strong in a vision, but they're willing to be malleable and and willing to take in and shift that direction a little bit here and there. So,
and I think that's the key. It's got to be a little bit, because you constantly will have a lot of people around you telling you got to do this and doing that. If you listen to everyone, you're just going to get confused. It's going to be like, instead of going from here to here, you're going to go here, all kind of loopy around. So advice is good, but again, it's that balance, because if you take too much advice and keep chopping and changing, that's probably something I've learned over the years as well. It can actually be a bad thing. You've got to turn around and go, look, we're doing this, back me, or I'm out, or get rid of me. I know it probably sounds crazy or almost contradictory, but I think there is that kind of balance there. Yeah.
No, fair enough. I'm kind of keen to pick your brain on the story of Intercast Australia, because I just find that very interesting to me. Like, I invest a lot in businesses, whether I used to probably be similar to you, value investing. Now I probably look more at the growth side of things, but this is one that you bought into a business, and you took part, worked with the team there, which is not very common for retail investors, sort of thing, like myself. How did you find the opportunity of Intercast Australia, and what sort of got you into it?
Yeah, so that was before I sold Net Origin. I'd started making some money, but I had a heap of time, and that I was just getting bored. So I had a guy come to me and saying, "Would you want to buy a business?" And I was like, "Yeah, you know what? I'll give it a crack." So you would probably might not even know this, but there are a bunch of different business breaking websites online. Yeah, so you can literally just look at businesses for sale. And we were looking for ages, and we were looking at a range of different things. Like, there was a playground manufacturer, there were cafes, there were bars, there were all these kind of types of businesses. But one big thing for me is I probably do have a few criteria in a business that I'd like to see. Intercast it's a non-ferrous foundry. Essentially what that means is it melts metal, but it melts bronze, aluminium, zinc, lead, just nothing steel. So it doesn't do any steel, and it makes parts for a lot of mining companies, like these weird parts, these bushes and such. It does a lot of artwork as well. Like there's kangaroos in the city that were made there, a big horse at Ascot, that sort of stuff. So it does a lot of art. Sculptures by the sea in Cottesloe, that we do stuff for them. But what I liked about the business, and you're going to, I think, see this a lot more over the next 5, 10, 20 years, it was a few older guys that have been running the business, and you find as they get kind of towards retirement, they don't want to take any more risks. They're kind of like, you know what, I've made my money now, I'm just going to keep it ticking along, I'm just going to keep doing things that I have, and then I'm going to cash out. And, there's the boomers that are slowly going to retire, and I think you're going to see a lot more of these businesses coming up. What I kind of saw going into that business is I was like, wow, this is a real niche business. So it's got a lot of repeat customers. It makes parts that are designed to wear. So by nature of that is these customers keep coming back because these bronze parts are designed to wear down to protect a lot of the steel. So it's like, okay, you've got customers coming back. I was like, you've got a business owner that didn't really want to drive the business because they just wanted things to be stable with the previous owners. And I was went in there and, a lot of it was kind of stuck in the 80s. It was all paper, everything was written down. I was like, my God, like everything was in their head, which it was a real challenge at the start because we'd have to build all these systems and processes.
I can see that, the crossover from your net origin experience and what your style is.
And that's it, right? And trying to go, to me, data is so valuable. It's so important. It's like the first step of that is, capturing that data. And then from there, you can work out what you want to do with it. So it's like even simple things like sales, they'd have all these drawers of all these past sales orders and all that sort of stuff. I was like, we got to get this on a computer so we can kind of say, okay, what are customers buying? When are they buying it from us? Why are they buying it from us? Is there different trends? Certain months they might buy it, so we need to know to stock up on it. Is there different prices people are paying? You have to kind of get that information out of the client when you're doing emails. And usually with that type of business, you got to give them a call and say, where's our pricing at? Is our lead time because you got to manufacture it? So it's kind of capturing all that sort of data, which I loved. Like, I just thought, I was like, this is just such an opportunity here to get an old school business and kind of bring it up to the 21st century. Like I built a new kind of quote calculator pricing. There was just a heap of information I was trying to capture, which we did. And the benefit was, there were employees there that did a lot of the day-to-day. So I still... if they heard this, they'd probably laugh at me. I wasn't there all the time helping them out with the mates. It's a hard job. Like, they're in 70, 80 degree heat. Like, I'd get out there and help them with like the pouring of the metal and stuff like that. So I'd still try to get a taste for how the actual processes out there works as well.
The stuff on the ground.
So you understand is like, the guys are complaining about maybe wanting to leave early. Not complaining, they're saying, we want to leave early. You go, no, I get it. It's 80 degrees back there, whatever it is. And that's in summer, to be honest, a lot of the time we'd say, no, we're not doing any pours on this day or at a certain point. So that's what I kind of liked. I was like, it's not like that business needed me to be in there every day. There was a huge opportunity to make it more efficient. And it was just something different. It was like, to me, any business is just systems and processes. Every industry, every business has its own challenges. It has its own opportunities. So if you can kind of understand how a business works and you're, semi-decent at setting up these systems and processes, you can realistically go into kind of any industries you want if you at least enjoy it.
Well, did you, was this all upfront work that you sort of did and conceptualized beforehand? Like a lot of, I suppose, private equity or buying into businesses like this, people will go in with a set plan of like, cutting costs or optimizing or automating stuff. Did you do all that work before buying in, or did you see the opportunity, talk to the founding team and stuff like that, and then go in and work with them to start sort of make it happen? Or did you go in fully with a plan?
Well, it's kind of gone back to what I was saying before, where ignorance can actually be a good thing. So I went in there going, oh, this will be easy. No, I didn't have necessarily the plan. I had no idea how, we'd done our DD, so I had a little bit of an idea how things worked, but I had no idea how much work was actually involved in a manufacturing process. Like, things are out by certain degrees. Like when you're casting metal, there's just so many different variables in that business, which I'm so happy that I bought it because I learned so much. Going from web hosting, which was quite technical and automated, manufacturing is very, very different. And even, with Net Origin, people would pay me within a certain time. I'd cut off their service. When you're dealing with big mining companies, they might pay you 3-4 months later. If you cut off their service, they go, okay, well, we won't buy from you again, and you're going to lose that client. So you have to kind of learn to accept that with your cash flow issues and stuff. So no, it was more actually I went in there with an idea of what I thought it was going to be like, and it turned out to be a whole heap more work involved. A massive learning curve.
So then how was that experience? Did you have the time and like to sort of go in there, realize all that, learn it, and then be able to shift your skills and experience into it, and then help to optimize and bring it up to the 21st century? Was it like a real long slog of a process, or how long did it take? And
I mean, when that was, I can't remember. I was 25 at the time, so it was that 6 years ago. The first I can't even go. The first couple of years were really full on. Like, there was a lot of time. Then I was just lucky that at the time I still had Net Origin, which was kind of, making me money, and I wasn't spending as much time there. I think a lot of people buy businesses when they're working full time and go, and this had managers. There's managers there. It's fine. I won't have to get involved. I think you've got to be very, very careful when you do that. Because even if someone's trying to sell your business and they say the owners aren't that hands-on. They probably are pretty hands-on.
Yeah.
So yeah, no, there's a lot of time kind of involved in that initial setup of getting that done. But it's like I was saying before as well. It's like we built a lot of these systems, these processes, which took ages at the start to make sure later on I didn't have to do that work. So that was that was a real learning curve. And it got to the point where it was probably 2-3 years ago, and where I actually took on too much. Like I had another company attained a DC2, which is Addison now. It just listed. I was not exec, but I'd spending more time there. Plus I had Intercast. Plus I was actually starting to get more and more involved with my investing. And it was when this would have been just after COVID hit, and I was like, "There's nothing." At the start of when COVID hit, it was like, the world's ending. There's nothing. There's going to be nothing to do and stuff. So I was like, I'm going to get involved in all this different stuff. Yeah. The world didn't end. Yeah. Everything started going a bit nuts, and I just took on way too much. Looking back on it now, I think what I'd say to people is it is good to have your finger in a few different pies. Oh, and I bought a house. I was doing renos. Sorry, there's all this other stuff I was doing. Yeah. I was like, it is good to kind of have your finger in a few different pies, but you've also got to be careful, because my attention was just taken away into so many different businesses, and it wasn't easy. Like I was thinking about, okay, melting metal here, and then renovation here, and then tech here, and it's like this is like a full switch in my brain, and that's actually, it's a really, I didn't think it would be, but it really drains you having to constantly change between that. Yeah. So in the end, what I ended up doing is, I stepped up as MD of DC2 at the time. It's now Addison. Stepped back from Intercast, like I sold 2/3 of it. Yeah. Okay, gotcha. Even like Field, I'm not exec there now, so it's the guys need me and stuff. I'll help out. Yeah. So I stepped back from a lot, because I went from the point of being kind of bored doing nothing to taking on way too much, and then I was like, okay, now I've got to simplify things a bit. And I'm still 31, so I'm still kind of finding what's that balance. What do I actually find works well for me? Yeah.
And I suppose everyone's probably different. For you, it might be still that might be a lot more than your average sort of punter. Yeah. Because you live and breathe this type of stuff. But right, so the experience did kind of get like pretty hectic, pretty full on, just because there was so much that you were working on at the time. Yeah. So with this type of stuff, I actually had no idea that there's business broking websites. That's wild.
There's like a dozen of them I used to check. There's heaps. Yeah.
So a business broker came to you, said like, "Are you looking? Would you?"
No, we'd approach them. So there's actually companies that are business brokers. So kind of like real estate agents, but for businesses. Right. So we started approaching them and saying, we're looking for this type of business, that type of business. Yeah. They'd come with us with some and go, look, it wouldn't really fit. And then we just end up settling on Intercast. But yeah, look it up. And some of them are like, you could buy a new franchise. But I think the real opportunity are the ones where, if you have the time and the money, is to buy some of these businesses where the boomers, the people that are looking to retire, haven't necessarily invested over the years, but you can see the opportunity there. Yeah. And also, one thing I've learned since, we didn't really do it at the time, it's like, there is a million ways to do a deal. So if someone's asking for a certain price, I mean, you can get bank loans and stuff like that, but don't think you necessarily need to pay it up front. Like, negotiate it. There's earn-outs, there's vendor finance. It's like, maybe they're looking to retire, but you could say to them, can you retire in a year or two, and just kind of slowly train me over time, work part-time and do a payout. So I think that's a big thing as well for anyone that is looking to buy a business. Just because the headline number is something, it doesn't necessarily mean it needs to be that. Like, you can go in there with an offer and say, I'll give you this much now, this much vendor finance, or a few years, and I'll tell you to piss off. But at least give it a try and find what works for you. Yeah.
So out of like a few things you said there, obviously you went in and you learnt how much, for lack of a better term, you learnt how much you didn't know about like the casting business, or for example like the terms of sale, or even just finding the right business that fits your style, your experience, or what you're looking for. What is the biggest barrier to entry to this type of investing? Like, what's the hardest thing to overcome?
With type of investing is actually like in buying your own business? Or
buying into a business like this.
One thing you got to be really, really careful of, which I think for me is, I was an auditor by trade. I always look at numbers. I don't know if it's necessarily a barrier, but a lot of businesses you'll see for sale are only like, say, a couple hundred, few hundred grand or so. You're buying a job. So it's like, they go, but we've got all this PPE, we've got all this plant and equipment, we're making no profit. It's like, well, I could go earn what your profit is and put that money on the stock market. So I think that's not necessarily a barrier, but that's definitely something to look out for. If you see, like, we looked at things like fish and chip shops and stuff. And I was like, man, I can make a fish and chip shop franchise and do this and do that. But then by the time you look at what they're asking for and the profit they're making, it's like, well, I'd be working for a few dollars an hour. If that, that's not going to really stack up. So just be careful on that. But I think an internal barrier for a lot of people, it's like, it is daunting going into a business, especially if it's a field that you've never been in.
Yeah.
Because there is a lot of unknowns in that. So it's a lot easier maybe if you are working in a business in a management buyout, you've been doing it for a number of years, but going into something completely different, it can be quite full on. And it's also the time. I think a lot of people might be earning X amount from their job in the day, and they go, well, I want to make more than the stock market. I want to make more than property, and I look at businesses as a way to make extra cash. But unless you can be a silent investor, which even on that, I've had opportunities where people have said, come to me as a silent investor, but I wasn't really silent because they kept coming going, I need help with this and help with that and help with that. If you can find those silent investments, another issue I've seen with the silent investment is a lot of people say, okay, you're a silent investor, here's this much. When they're starting out, they need the risk capital. Later on, things are doing really well, you start to get a decent dividend. They go, oh, well, you're not actually doing anything in the business, so we want to buy you out or this and that. That actually happens quite a lot. And you go, well, you took my money as a risk capital, this is my reward for that risk. But I think a lot of people start to begrudge those type of silent investors, so just be careful on who you do invest with on that sort of stuff. You've got to have someone that kind of sees that you took the risk, okay, this is your reward, that not that you took the risk and now there's a reward, but I'm generating that reward because I'm the one working in the business, so I will know you're getting a salary for that. So just be careful on that.
There's a few nuances to it. Like it, So it definitely, I mean, obviously you are buying a business that's like a lot closer to you sort of on the ground. Like, if I'm buying something on the S&P, like, I'm just I can vote on a proxy form and but like that literally is doing nothing with the capital I'm putting into it. But this is
every vote counts.
Actually, true. But okay. So it's active, and you got to be ready to sort of.
I mean, look, there definitely would be some opportunities that are out there that aren't necessarily active, but the real decent ones where you got to make some decent return for relatively less risk. 9 times out of 10, you're better off buying property or shares. I'd find you do want to make sure if you're going down the path of buying a business or investing in a business, you do want to put some time into it. And not just that, it's like, if you end up buying a decent stake in a business, someone else is running it. As an owner, you want to probably still make sure you're meeting up with that person and chatting with the owner or the manager, to make sure they're doing the right thing. So
then you can fully like trust and back them, like you were talking about with your
that's it.
thing.
But I don't think it's a matter of, okay, the manager's in there, I'm never going to speak to him again, just make sure you're paying me my dividend every month. It's like you'd still want to at least have a monthly catch up or something like that, just see how things are going. But a lot of times, even I've seen it before with employees where people won't tell you their grievances until they quit, and then by then it's too late, and as an owner you might have to get a new manager in and stuff. It's like you want to be on top of that sort of thing.
Well, I see this is incredible, like insight. Like I sort of maybe idealize buying, stakes in businesses in my mind as opposed to
that's where I was.
But like
I went down that path, and that's where I said I took on too much because it's just so hard to find those passive investments unless you've got like a 5-10 year horizon. It's all about capital growth, no income and stuff like that. That's what my aim was in my 20s. I was like, you know what? I'm just going to take a stake in all these different businesses, just get all this dividend income coming through, and it will be great. And it was good. You make good money from it, but it's full on. I still think you got to kind of simplify. Maybe have 1 or 2 of those type of businesses, and then have your blend of maybe Bitcoin or property or shares, whatever it is you do.
Gotcha. No, that's amazing insight. Thank you. So the last one again. 2 questions, very similar, but I'll put them together. Just, I want to get to know how you think about now that you've done both for sure, investing in an operational business that you can be really involved in and sort of not like turn around or just improve their processes and grow that sort of value there versus investing in something, you're angel investing in field, really early days, high growth, you can see the everything that's ahead of it. Like, how do you see the difference between those two, and going forward, what do you see yourself doing more of?
I mean, they're chalk and cheese. I mean, no one can see me, but I'm pointing. That one is what that's the operational business, is what I've kind of found to me is I like the operational business stuff because I'm just learning so much from it. I'm getting so much experience trying different things, but eventually, maybe not necessarily purely angel investing, but in my mind, like longer term, I'd want to start to move more towards the investing. Like the operational stuff's great, but I wouldn't want to be necessarily running operational companies for the rest of my life. Like I was talking about dying at my desk, what I'd ideally like to do is over time, as I build that experience, kind of build my wealth, is actually go a bit more into, maybe it's angel investing, shares, property, just that mix as well, move towards that. And while having that operational those businesses now, I just make sure that I kind of have that long-term horizon. So the money I get from that, I'm putting into longer-term investments elsewhere. A big mistake I kind of made when I started making a bit of money is I'd get money and hate to sit on cash because I was like, cash, you're earning barely anything. No, I've got to invest it. I've got to invest it. I've got to invest it. But I did that and kind of broke a few rules and I lost money. So I'd rather earn, say, 2-3% than lose money, right? That's still a better return.
What's Warren Buffett's number one rule? Don't lose money. Rule number 2, don't forget rule number 1.
That's it, right? So that's my biggest thing as well. So I think, while I'm kind of getting all the experience from the operational stuff, it's like, it's building the rest of that kind of passive investments, that investing side of things, which is still that blend of shares, angel, property. And again, over time, that's going to evolve that mix in what I do. It's just, I find I naturally diversify into certain things. And another thing I learned as well, I think a lot of people when you're younger, they're saying you have to invest in all this stuff for diversification. I don't necessarily agree with that. I think you find over time, you will just naturally diversify into other areas anyway if you are kind of that type of person that has a thirst for knowledge and wants to learn about different things, but never make an investment and say I'm doing that because I need to diversify. It's
just to have a little portion of that to make yourself sleep better, because at the end of the day, if you just have it for the sake of having it, you don't really know what it does, and then when it goes down, you're like, why the hell is it going down, or whatever. I
think that's it. Especially when you're young enough, it's like I think you'll find that diversification will kind of naturally happen over time.
Mate, that's huge. I think there's a lot there, and I can see how a lot of the stuff that you're investing in you're getting a lot of the lessons, or maybe the principles of the stuff that you look at from your experience, like in now operational businesses, in management roles, and with the Net Origin sort of that experience, how you can probably look at, well, whether it is an operational business that you can really optimize, or whether it's a founder-led high growth business that you can see some of the parallels that you maybe had, or that you can see in their vision, sort of heading towards. So it's huge. It's huge to just bring that back together and understand it. And I'm sure you reflect on this quite a lot. For the listeners, out of your investing philosophy and your journey into what your investment portfolio is now, if there's one thing that they could get out of this discussion, what should it be? Like, what's your key takeaway, your biggest thing that you try and remember with investing? It's probably a lot, to be fair.
So just one.
I know. What's like one thing that say the different tiers, like your mission, and then like how you go about it and stuff like that. What's like the headline thing that you're looking for as you find something that you want to add to your investment portfolio?
One thing is, like, I always look at different industries, but I like to at least understand the industry, how things work as well. Like a lot of people will come to me and go, put money on this kind of specky explorer stock. I don't really get into mining. Maybe eventually I will, but I don't understand necessarily a lot of commodities, how the drill results work, what makes it different, and I've never really gotten into that, even though I'm in Perth. That's crazy. I haven't done that, but it's like, we
actually just talked to Dan Wimmer last week.
He's completely different. I know. So I need to look into it, but I always like to understand what I'm kind of doing. And I mean, a big bit of advice for me is very young. I've just always been impatient. I think in like the gardening, like I was talking about first, I'm kind of learning some patience with that. Don't feel like if you have $1, you have to invest it. Because there's different times in the market where it might be better to invest a bit more or a bit less. There's different companies that might be better to invest a bit more or a bit less. I think a few mistakes I've made is thinking that having too much cash sitting there isn't productive. It's you actually want to have that cash sitting there to be able to pounce, so when things do kind of change. But there were definitely times in my 20s and even a bit more recently where it's like, no, it's sitting there, I've got to invest it, otherwise it's just a waste. I think that's definitely a big one. It's just having that patience on it. And it feels like it'll never come. It feels like, no, but it's been 2 years and, everything's still on us. And then bam, even with COVID, everything crashed. It was like, yes, go.
Instantly.
But it feels like a lifetime. And those things always happen. You always have those opportunities pop up, whether that's in the private world or, public markets. It'll definitely happen. And you'd much rather, even if you have to wait 2, 3, 4 years for that amazing opportunity, you'd much rather jump on that than invest your money in a bunch of duds.
So it's like, have you played Cashflow, the Robert Kiyosaki game?
No.
Oh, it's like he made a board game, and essentially you go around and you can roll like 6 or 7 times, which is supposed to be years or whatever, and not land on anything, but eventually you'll land on a major opportunity or something, and it's just trying to teach you like the principles, high level sort of this investing. So you wait year and year and year, and then when you land on that major opportunity, but in the game, if you don't have enough cash, you can't invest in it, and it's like the most lucrative thing ever. So that's huge. So it's finding a balance for you at the moment between, if you want to go get it, like if you want to be invested fully, go get it, and then otherwise, like, you know, waiting for the right thing to come and having that dry powder ready to sort of go.
Yeah, and that's it. It's like I'd never put 100% of everything into one business.
Yep.
But it's at least saying, you know what, I want to make sure there's a decent amount, so when that opportunity comes along, I can put it into it. Yeah, rather than spreading yourself too thin. And you can always sell stocks as well, you know, to kind of take advantage of that other opportunity. But at the same time, you know, if you're looking at a bit more of a longer horizon on an investment, one thing I've had before that really, really annoys me is I invest in something and it might go up, or if it goes down a bit, because maybe I've just gone in too early, whatever it is, I've had to sell because of another opportunity. It really does frustrate me, because I was like, I don't like selling until it's at the point of, okay, this is kind of my criteria of where I'm at. I'm ready to sell now. If I have to sell it before that does really, really, I don't know what it is, but it just infuriates me being in that position. So I try not to be if I can.
Fair enough, mate. We're definitely at time, but that has been a phenomenal discussion. Thank you so much for coming on. Absolutely loved it. So thank you.
Cheers. This has been awesome. Yeah, thank you so much.
We'll wrap up there then. Thank you for listening. Find us at curiositycrisis.com and Curiosity Crisis on Instagram. We're on all major streaming services, so you can listen how you like. A favour, if you got anything out of Blake's investing journey and his insights, please send this to a friend. Your recommendation's always worth a lot. So thank you, and we'll catch you on the next episode. Cheers. Just a quick reminder, this podcast is purely for your entertainment and education. It is not financial advice. Everything we say is just our opinions, but we hope you get something out of it and enjoy.